Hey everyone, Couch Investor here with another video for you today. Today we're going to talk about our first casino stock out of the series. In my last video we talked about Boeing. It was in the airline series. We talked about Air Canada and Delta. If you haven't seen those videos, go check them out. I think they're going to be here or here. Again, also thank you everyone that has recently subscribed. The beginning of the month I said my goal would be to reach 100 subscribers by the end of the month. We're already at 73. So if we can reach 100 by the end of the month, that would be awesome. So go hit that subscribe button, and yeah, let's get started with our first casino stock today. So our first one will be MGM, then our second will probably be Wynn, and then our third you can choose, but I've heard already a couple of people say they want Sands or Penn National. If you have another one like Caesars or something, let me know down in the comments below, and yeah, let's get started. So as of now, the stock MGM, ticker symbol MGM, obviously goes for around $13.94. It's down almost 4% today. Now let's look at the graph for the year. It's peaked at $34.54, went all the way down to I think $7.14. So if you pick that up at $7.14, you would have almost doubled your money by now in a matter of a month. And if it goes back up to the top, you would have made 5 times your money, which is not bad at all. But would it be a good entry point right now? We're going to see, we're going to look at the balance sheet. So also, I know a lot of you don't really understand the balance sheet or don't really care for it. I just want to know my opinion and what I'm going to do. So if you want, you can just skip to the end of the video. I won't be disappointed or mad at all. I understand. I'll be leaving down in the comments below the timestamp, so it's easier for you if you just want to see my opinions or maybe just the articles. You can just skip, that's no problem at all. Right, so let's get started with the balance sheet. Ticker symbol MGM, price 13.96, PE ratio of 3.57, pretty low, because if you can see here, the 5-year average PE was 27.5. Dividend yield, that's for the whole year, is 60 cents, so you won't be really buying this stock for its dividends. Earnings, they beat the earnings, the last earnings, and all-time high, like we said, 34.54. Now the earnings, as you can see here, they beat it by quite a lot, but they missed the 3 earnings before that. That's I still haven't figured out why. So if you know, put it down in the comments below, because if you can see here, 2016, 2017 revenue and earnings grew, and then 2018 revenue grew as usual, but earnings plummeted to around 466 million, and then 2019 went back up, revenue up, earnings over $2 billion. So I think maybe some acquisitions happened in 2018, or maybe they had to pay back leases or something. But yeah, something clearly happened to their cash, to their earnings in 2018. All right, so cash, they have $2.3 billion in cash. Not a lot, but it's a casino. Revenue, 12.8 billion. Cost of revenue, 7.6. So that leaves us with a gross profit of $5.2 billion. Total operating expenses, 1.1 billion. Operating income, $4 billion. Now cash and assets, again, same thing for cash. Receivables, $612 million. Inventories, $102 million. No prepaid expenses. It's a total of $4 billion. There are some other specific things that I didn't put right here. Non-cash assets, property, $31 billion. Depreciation, $8.5 billion. Net $12.5 billion. Intangible assets 3.8. Others, again, lots of specific stuff, $456 billion, which leaves us a total of $29 billion. Now, liability, short-term, long-term, or current, non-current, or financial term, is a 3.19 billion for the short term and 18 billion for the long term. So it's pretty big difference, but hey, it's usually that's how it works in liabilities. Short term, you're going to have less than in the long term. Let's break down the short term because that's the most important for us as of now. So accounts payable, 235 million, accrued liabilities 1.4 billion, deferred revenue, very small amount, 367 million. So you see the difference between a casino and an airline or maybe cruise lines is that, well, they have much less of deferred revenue in their liabilities because, well, it's a casino. Whatever goes on the table is already, basically it's already lost to the consumer and it's a gain for the casino. It's a total of 3.19, like we said right here. Now, because it's a casino and, well, casinos make more money than a lot of industries combined, you will have big margins. So gross margin of 41%, operating margins of 31%. At first, when I saw those numbers, I thought they were fake, but no, they're very real. Stock repurchasing of $1 billion, which is, it's a lot, because if you can see that it's like half their cash pile, it's a bit of a pity. Last year's earning per share is 3.88, and for this year it's only 17 cents. So you might see another earnings miss on the graph for the next year. Like we said, dividend payment 60 cents. Current valuation is 6.8 billion. It varies every day, 6.8 or 6.9 or 7 sometimes. Earnings $2 billion. Value versus previous earnings. So that's a total. If you buy it right now, you'll make your money in 3.4 years, so to say. Then current reflection of earnings is $247 million. So you can see the comparison right now. They're supposed to make 10 times what they're making now. But then again, that's just a reflection as of now. Looking at those numbers, I think MGM, that's why I started with this one, is one of the better casino stocks out there, because they don't only have the casinos, they have their venues, lots of performances going on there, singers, magicians, fights. The UFC have big fights in Vegas, usually there. So they have revenue coming in from a lot of directions. Don't forget, other casinos also have lots of, not lots, but a couple of casinos outside of the United States. For example, in Macau. Now in Macau, obviously it's China, so everything has been closed there before things closed in the States. There's also heavy regulations now going on right there. So yeah, that's that for me. MGM, if I should pick a casino stock, would be probably MGM. Now, some of the articles. MGM Resorts insiders bought up the embattled stock. Very important to know. We'll read this because it's very short. So, gaming and lodging giant MGM Resort International closed all of its US properties in March, so it's already a month that everything is closed due to the coronavirus. In addition, Chairman and CEO Jim Murren stepped down. The company's share has been cut in half in 2020, of course, and then, this is important for us, MGM insider have scooped up more than $27 million of stock since late March. The director is leading the pack, paying $18.7 million from March 30th through April 1st. So that's what, 2 days, 1 day, for a total of 1.6 million shares. Now, why is it important? Is because maybe this gives us some confidence that the insiders are buying the stock because they know eventually the company will go back to normal. They will probably make a lot of money because, well, the size of this 27 million, and this guy alone, the director, bought $1.6 million. So if you see the stock going up faster than usual, reaching a price of almost their all-time highs for the year, don't be surprised to see some selling, because it will probably be happening on the inside, right? They would cash in, maybe they would sell, so like some profits or whatever, but don't be scared or don't be surprised that this is happening. This is happening all around the world, but it can be a very good sign for us, because if they trust the company to buy their stocks themselves, maybe we should be more comfortable, let's say. Another thing, like I said, MGM has resorts, lots of entertainment going on there. And as you can see here, MGM Resorts Entertainment Partners unite in unprecedented support for companies' employees during the crisis. So a lot of celebrities, David Copperfield, Jay Leno, Bill Maher, a lot of people that are performing there are starting to donate to the fund that will help the employees when, well, lots of people have lost their jobs, so someone or some corporation is willing to usually pay their salary, healthcare, or whatever. So they created this this relief fund to help their employees. For me, it's very comforting seeing a casino, especially a casino, caring about their employees and staff the way they do right here. It's also very nice to see that people that are performing in these venues are actually participating in this, meaning usually celebs go to a venue, they perform, they leave, they don't care what happens after that. To see that celebrities, they don't necessarily have to help, it's just that I think because they like it so much, they come there very often. It's very reassuring, comforting to see that outside help is coming as well, because most of them are also residents, right? They're resident, meaning when you go to Vegas, you will usually be able to see a David Copperfield show. Doesn't matter when you go there. So that would make sense. Lastly, this is like how the casinos are handling the situation. So today we're going to see how MGM is handling this. Unlike rival Caesars, MGM stock is more straightforward bet. Like I said, for a Vegas rebound, the company's key properties are clustered along the Las Vegas Strip, but while their cash cow sits idle, their cash cow meaning the casinos, the company likely has the liquidity to ride out the shutdowns. Like I said, it's one of the better casino stocks out there. So how about going forward? What happens if the shutdown extends? Obviously, could be. You never know. The company recently executed several sale-leasebacks transactions of its real estate. That's one of the things that I said that might have happened also in 2018. Some leasing, some acquisitions, whatever. Yet while the bulk of its prime real estate assets have been sold, leased back, several sellable properties remain, including 50% stake in the Las Vegas City Center development. So yeah, it went down. Can it go back up? It already went back up over $10 a share, almost at 14 as of now. As you can see, almost 14. So to sum it up in short, for me, it's a very, very interesting stock to analyze and to look at right now. Now, unfortunately, it already went up almost 50% or more. Well, if you look at it today, it almost doubled since its lowest point. So to buy now would be a bit of a risk. If you look at it in the longer term, no, because you could still double, if not more, in the long run if it goes back up to its all-time highs, but that will take time, obviously, because I don't think casinos will be the first thing people will do when they can get out of the house. But I would like it to go back down a bit towards the $10. I would be very comfortable buying at $10. But other than that, if I see that it doesn't go back to 10, maybe 11, 12, stays there for a couple of days, we hear some positive news going on, then maybe I would pick some up. But that's just my opinion. It depends. If you hear bad news, you will most likely see the stock go down. If you hear good news, it might go up. But yeah, that would be it for today again. If you haven't watched any of the other videos, we talked about Zoom, the cruise lines, airlines, AMD, Beyond Meat. We covered a lot of stocks. And if you haven't subscribed, now's the time to hit that subscribe button. Again, thank you everyone. Stay safe, stay healthy. See you in the next video. Bye bye.